Welcome back in YouTube. We have Mickey Mouse reporting earnings today, and as most of you know, my wife and I are big Disney lovers, had the whole Disney wedding, had the happy ending, and she refused to listen to me about Disney's stock price, but thank God we got our average down substantially. And so as most of you know, I'm pretty hard on Disney here, as I do think that there is a tremendous amount of opportunity for growth and to get margin expansion here. And I had a $75 price target on this stock when it was trading well over $120 a share. It is very hard. It is very hard to do. It is very hard when everybody laughs at you when you do your valuations and you stick to your guns. But here we are now, and Disney's been trading between $84 to roughly $90 a share, getting pretty darn close to that $75. Now, here's what's interesting. When I was talking to my wife, I told her I wanted Disney to get aggressive on live sports. And if they did that, I would be willing to take a risk on Disney here. And the reason being is when we look at the intellectual property that Disney has, it's really hard to put a price on that. The real estate, the mouse, Marvel Comics, ESPN, if they can figure a way to really be the house of live sports, along with Marvel and Disney streaming, I tend to think that they can absolutely be a monster of a streaming company and grow margins and profits, as they did show in their last quarterly report. They're getting more efficient with streaming. Subscriber growth was a little down. Linear cable is obviously a problem, but those are things that you're going to have to deal with this company, is the capital expenditures. And that is where we had the conversation, my wife and I, on loving a company and enjoying their product versus investing in a company and it actually being a good investment. Two separate things, believe it or not, even though one should complement the other, doesn't always happen. So what happened today? Well, seems like Disney is getting aggressive on the sports side, partnering up with Penn Entertainment to launch the sportsbook on ESPN platform. This is going to do multiple things here. Not only are they getting a nice paycheck from Penn Entertainment, this is going to keep people that have substantial money on their platform for a longer period of time, which means that ad revenue should actually demand a premium and grow margins. This is just one tiny lever that I was looking forward to in Disney. And now what's going to happen is they report earnings today. I might do a live stream if we get a substantial amount of likes on this video. I'll go live, I'll go over my valuations, and I'll go over what I think I'm going to do. Now, I have been raising capital because if Disney does pull back on bad earnings and they're starting to get aggressive here on the streaming side, especially with live sports, I think I'm going to be a substantial buyer of the company on a big dip. So this is something to keep an eye on, guys, as Disney's going to report earnings. Of course, this is just my 2 cents, not financial advice. Always speak to a professional before investing. But it will be interesting to see if they start getting more aggressive on the live sports, because the intellectual property by itself is very strong, but complementing that sports side changes the game for them. As always, appreciate your time. Thank you so much for spending it with me, and we will see you in the next one. Peace.